What's going on, YouTube traders, investors? Today we're looking at AT&T, ticker symbol T. They're a dividend aristocrat and have raised their dividend for 35 years. But the last earnings report was not so good and the stock dipped. Is it time to buy? Let's get into it. All right, before we get into the video, there's going to be a link in the description below for Robinhood. If you use that link to sign up, you get a free stock, I get a free stock, it's all good. And you stand a chance of getting a Berkshire Hathaway, Apple, Facebook, GE, Ford, and many more. And remember that everything on the Robinhood app is free. You don't pay any fees to trade. That means buy or sell any stock. Also, options are free too. So please use that link. It'll be greatly appreciated. Thank you in advance. Okay, here we are in the web platform of Robinhood, and we're going to go ahead and go over my position, how much I have in AT&T, and then we're going to jump into the recent news, which consists of their earnings report where the stock dipped. So currently I have 14 shares at an average cost of $38.84, represents 14% of my portfolio. I'm currently down almost 5%. And that 5% was pretty much the dip that it took on earnings. Now, we'll go ahead and talk about these earnings for a few minutes, and then we're going to jump over to Finviz and check out all the particulars with the dividend, how much you get per share, per quarter, and everything like that. But those earnings, let's see, the top line was actually a beat. They were expected by the analysts to bring in 87 cents EPS, and they came in at 89. So they beat by 2 cents. The revenue, however, was a slight miss. They expected a 46.96 billion in revenue, and they actually came in a little short at 46.82 billion. But that is not what drug the stock down. A slight miss like that is not what drug this down. What drug it down was the numbers. And what I mean by numbers, I'm talking subs or subscribers. They lost a combined 1.2 million subscribers. Now, that's divided up into two groups, which was the first group, 945,000, where their satellite, which is the direct TV portion of AT&T, and then their fiber optics. Their UVerse customers, I believe, but it's the satellite and their actual cable subscribers. They lost 945,000. Then they lost an additional 219,000 with their AT&T TV Now service. So combined there is about 1.2 million subscribers. And they were expected to lose subscribers. The analysts expected them to lose around 782,000. But they blew right past that mark. Now, the only positive news that I can take off of this is they have HBO Max, which is set to come out, I believe, in May of 2020. Now, I'm thinking, HBO Max, is it the same as HBO Go? Is it, what is the deal with it? So I did a little research on it. HBO Max is going to include not just HBO programming, but it's going to include Warner Media, which AT&T bought Time Warner. So they get all the shows that Time Warner had. And if you know anything, you know that Friends and a few other shows are coming off of Netflix very soon. And guess where they're going? They're going to be included in HBO Max. Looking at Friends, a few other shows, Fresh Prince of Bel-Air, and a lot of Time Warner programming. And that's the main reason that AT&T bought Time Warner. So there is some positives in the future, and I believe this dip is a time to buy more. I know I'm going to. So we're going to go ahead and jump over to Finviz and check out the dividend. Okay, here we are on finviz.com, the best place to research a stock. And once you come here, you type in the ticker symbol and it pulls up the daily chart, which we're not going to focus on this. We're going to focus on that in the Thinkorswim platform. So you scroll down and you get here. Here's all the numbers that you really need to know. Dividend yield, 5.63%. Very, very good for a market cap company of 270 billion, which makes them a mega cap. So you can't find any other mega cap out there that's going to pay you this dividend yield. The dividend is $2.08 per share divided over 4 quarters, which means every quarter you get 52 cents per share. Very, very good. Now, the only thing that's kind of concerning, and I don't know how correct this payout ratio is, but it's saying it's 84.9%. It's not good, but I've seen worse. And I will say AT&T is a dividend aristocrat. They have grew their dividend for 35 years now. So I don't think the dividend is going away. I don't see them reducing it. So I think it's safe even with that high payout ratio. And as you can see for the year, they are up 23%. Now we're going to check down here. This is not going to be very good. There's a lot of downgrades. We're not going to even look at these in November. We're just going to look at these two, which Deutsche Bank kind of surprised me with putting it at a buy at a target price of $44. And that was they initiated coverage on AT&T. That was January 22nd, so 2 weeks ago. Then the latest is a downgrade by UBS from buy to neutral. They're saying they're lowering their price target to $39, which you can look up here, and the consensus with Finviz is $39.46. So, like I said, this is a consensus, and that's what they went with. So, but this is the look we got in Finviz, and now we're about to jump over to the Thinkorswim platform and analyze the stock and see where it may be headed. Okay, here we are in the Thinkorswim platform. This is a 1-year chart on AT&T. And as you can see, back in February of last year, it hit a low of 28.92, but then that was a pretty strong uptrend until we get to this high in November of last year of 39.70. So uptrend. And then basically, if you had this charted, you would see that it was in an uptrend in a channel, and then it broke out of that channel right in this area right here. Went up to hit a high of, I think, 39.94 on the 180-day chart. But this is where we're going to focus at right now, because this, to me, looks like a channel that AT&T is traveling in since it broke that uptrend trend line and created basically a new trend, which is this channel that it's in right now. So we're going to take about 39.70, somewhere right in here, right about there. And that's going to be our resistance line in this channel. And then we're going to take right about in here, we'll say 36.55, somewhere right around there, give or take. Right there. So this is the channel that AT&T is now traveling in. And you can see it's hit up there once, got rejected, come back down. And you can look, it's hit on that about 36.50 mark a few different times. Now this was since the earnings miss, basically, where they lost all the subscribers. You can see it dipped below it, but it closed above it. Closed above that 36.50. You can see today isn't, well, what day was this? This was February 3rd, was not a good day. And this is in the, after the market closed on the 3rd of February is when I'm doing this video. So, you know, you can see it come back down some. So where we're going to have to focus is right here on this bottom support line and see if this can hold. maybe there's going to be some catalyst come out. I don't know if HBO Max is going to be that catalyst for AT&T, but in the future, if it does turn around and approach this resistance line, we're going to look for a breakout, you know. And if you're looking for that, you want to see a candle that is completely above this resistance line before you know it's a breakout. Sometimes there still can be a false breakout, but that's generally what you want to see. If you want to see if it breaks out through here, it's probably going quite a bit higher. But if this line doesn't hold, if this support line doesn't hold, it's probably coming back down to right around the 35-ish. You can see that there was some support up in here. But it's really hard to tell. But what we want to focus on are these two lines right here, because I believe this is the channel that AT&T is traveling in right now. So, well, that's going to conclude this video. If you like the content, subscribe, hit that like button because it helps tremendously, and smash that bell for future notifications, and I will see you in the next video. Thanks for watching.